Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about what is a recession and how to profit from one. So I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you have any questions, concerns, ask them down below. So starting off is what is a recession? Well, a recession is pretty much when the general market falls more than 20%. Okay, this on average happens every 4 to 6 years. The last recession that we saw was in March of 2020. So it wasn't that long ago, but it was still decently long ago. So you can see the general market fell from about 327 all the way down to about 212. Now this was a fall of about 36%. And at the time there was so much uncertainty in the market. It's almost a very, very similar thing that we have right now. People don't know what's going to happen. At the time, we had lockdowns, we had just so much fear, so much emotion in the market. And what happens in situations like that is people want to pull their money from their investments and keep it and hold it in cash, right? And that's kind of what happened. And then once kind of the government started putting stimulus money out there and pretty much flooding the economy with money, we had this immediate rebound, right? Recessions can recover in a couple of weeks, kind of what we saw. But on the flip side, it can last a couple of years. In the 70s was a very, very hard time. Inflation was very high. It had very high interest rates. And just the overall economy was still kind of getting over the Vietnam War. And right now, it's almost sad, but we have a very, very similar thing. We had these roaring times when the government was pumping money into the economy, and then now we have high inflation, we have high interest rates, and just we have so much uncertainty in the market. Okay, and that's pretty much what is a correction. It's very simple. It's not overwhelming. It's when the general market falls more than 20% in value. Okay, and like I said, it happens every 4 to 6 years on average. But when the general market falls about 10%, this is called a correction. So a correction. This happens about every other year. So this is a little more common, but the beauty of that is you guys can buy in on great prices. That's what recessions and crashes bring, is opportunity. And a lot of people like to get worried during this time and they want to sell their stock because they will see their account fall 20% or more. You know, we saw the market fall 36%. So if you were holding this, if you guys were buying up here, now you're down $36 for every $100 you have invested, which is terrible. You know, you don't like to see that. People get worried, they get nervous, and they want to sell. For me, I almost have a different mindset, right? This is the time to buy. I would rather sell when it's peaked out on top, right? You always want to try to sell at all-time highs and buy at all-time lows. You know, that very, very common expression, buy low, sell high. A lot of people love to say it, but they don't actually use it. Another thing that you need to understand is trying to time the market is very hard to do. It's better to have time in the market. The reason why is even if you bought right here, guess where your investment is right now? You know, if you look at it, if you would have bought here, you still have great growth. Look at that trend, beautiful growth. You know, you're still looking at a return of right at about 15% if you'd have bought at all-time highs at the time. So have a long-term mindset. Use opportunity like these dips. Look at that. To buy in on more affordable pricing. For me, the strategy that I use is something called dollar cost averaging. It's pretty much when you invest on a consistent basis into a company, into the market. So what this does is whether the market's going up or down, you're investing. And anytime the market falls more than 6%, double what you normally will put in, because understand, you don't care about a couple of weeks, a couple of years. You're looking for retirement. You're looking 30, 40 years out, that this short term, couple of weeks, couple of years is going to be massive opportunity to get in on affordable pricing. And that's the mindset I have, and that's how you guys can profit off it. But overall, guys, a recession may seem scary and may make you worried, but have a long-term outlook. Keep your investment strong. And if anything, what you can do is just start holding cash. If you get nervous, instead of investing that money, hold it in cash and try to continue to buy in at those lows. But overall, guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, stay positive, and stay safe out there. We'll see you later. Take care.